Hi, I'm Alex, welcome to the channel and thanks for tuning in. In today's video, we're talking about HITI again, but specifically something which we need to address before the earnings are released later today. It's actually really important, and I'm not just saying this. It's still important if you're watching this after this results, so there's no need to switch off, but this is definitely how we, as investors, need to be thinking about the results. We will also touch on my predictions for the earnings and what I would be happy to see and what that means for us as investors as well. I appreciate the channel has had a lot of HITI content recently, and if you don't like HITI, then don't worry, because we do have loads of other interesting stuff still to come across all sectors. This will also be a quicker video than normal, but please, I'm asking for the same favour as always now. Please smash the like button. Please do your bit for the cause in helping the YouTube algorithm know that finance YouTube doesn't need so much clickbaity content. Your help over the last few videos has been amazing. Please keep it up. It's massively appreciated, and it's especially important in this case as we want to get the message out to as many people as possible. If you're new to the channel, make sure you're subscribed. If you want to see more content, want to join the private Discord, want to join the private video calls, then check out the Patreon link in the description below. And as always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So look, we don't have long here, so I'll be quick. The Q1 results are due out after market hours today. As a reminder, in the full year annual filings, Raj guided us to expect a revenue of between $37 and $38 million. The growth that this represents on both the previous year and the previous quarter is great news, and all of this, in light of an ongoing global pandemic, is great news. These results will include the impacts of revenues from the Meta Growth acquisition. This will be the first earnings release from the company which will include such an impact. It will not, however, include any of the impact from the Smoke Cartel acquisition. We should not expect that until the half-year results, which we can expect in around 3 months or so. As discussed in my previous video, following the release of the annual financials, if HITI does deliver those revenue targets, I would be happy to see the company generate around 3 million of EBITDA for this quarter. Anything more than that would be really good news, as it sets HITI really well up for the full financial year. There is a chance that they don't deliver this $3 million of EBITDA, and then I'll be digging into the numbers more to understand why and address the key things which we as investors should be discussing and thinking about. For now, however, it's a waiting game. Now for the main point of this video though. Ignore the net income and the earnings per share figures in this filing. Now before you go crazy at me for this, let me explain. When companies are at the stage in their growth which HITI currently is, it will be incurring a large number of expenses which are in relation to delivering the company's growth plans. These expenses are not recurring and will not be continued expenses year on year which the company has to incur. These may be store fit-out costs. You only fit out each store once. Costs to advisors in relation to the recent acquisitions the company's made. Again, you only pay these advisors once for each deal. Or perhaps costs in relation to some of the equity instruments which a company has. These are not recurring expenses, they are one-off expenses. However, without getting too deep into the accounting practices here, these costs will impact and will decrease the net income figure. As we know, the company has opened a lot of stores during Q1, it's also been very acquisitive and has incurred a number of advisor and transaction related costs, and it has been active in its equity financing instruments activities too. As such, these will all drive down the net income, and that may well mean that it actually is lower than it has been in previous quarters. The same goes for EPS. This is calculated on the same basis with net income, so this may well also be lower too. However, this is where EBITDA is such an important figure. You calculate EBITDA only factoring in things in relation to the business on an ongoing basis. Costs which are non-recurring are stripped out, and so you get a true, unbiased view of the underlying business. The company should not be penalised for investing in growth, and this is why I urge you to focus on this figure rather than net income. If this is the case, I can assure you now there may well be a number of low-quality financial news outlets and perhaps some other YouTube channels which express disappointment in the results on the basis of just this net income figure alone. Without digging into the specifics and the details of why this figure may be lower, that ultimately is just spreading misinformation. I will of course share my thoughts as we get the results, but I do urge caution around this point until we know what we're looking at later today. Now I'm sorry this is such a quick video, but I just felt it was really important to share this with you ahead of the earnings later today. Ultimately, I'm excited to see what Raj has for us later today. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. Make sure you're subscribed if you aren't already, and check out the Patreon link if you're interested in the Discord chat, the video calls, and a load of other exclusive content. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the differing views and opinions, so please get involved. Thank you so much for watching, and I'll see you in another video.